Good morning, everybody, and welcome to this week's weekly analysis session. It's Anzac Day, Monday, the 25th of April 2016. Let's get things underway. First and foremost, our disclaimer that the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So, before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. Disclaimer out of the way today. A mixed session. We're covering both the USA and the ASX in lieu of the long weekend, the Anzac Day public holiday today. So we'll go through and have a look at the benchmark indices. What's the current level of market risk? What does that mean for our portfolios, our watch lists, etc., and also identify some specific setups in both markets. For the time being, the ASX 200, we are in moderate market risk. It's been we just tipped over there last week into moderate market risk, and we're still in it, so that's a positive sign for our particular market. So if the Australian market is your primary market that you are investing in, it basically means at this stage that you are allowed to have up to 80% of your capital exposed to the market. That's the easiest way to think about it if you are doing direct shares. Obviously, the value at risk model suggests that you can have up to 12% value at risk. And as mentioned on a number of occasions, trying to get anything more than that 12% value at risk is very difficult when you're using direct shares. Let's go through to the S&P 1500. We are in low market risk now. We've been there in low market risk for a little bit of time now, which is a positive sign for that particular index. And if that's your primary market, it also means that you're allowed to have basically all of your capital, if you're dealing with direct shares, exposed to the market. All right, so what we might do now is go through and have a look at the benchmark indices. So you'll see here the ASX 200. We are now up into moderate market risk. Nice that we're starting to get some highs coming through here, higher than the previous sort of zones of supply. The real question is whether this particular level, and I'll just draw that in there, just put in a bit of a horizontal line. These levels here, we've sort of really got to get back up above that particular level, which you'll see was previous from a technical point of view, was an area of certainly of support. That sort of 5400 level, and then has since been a point of supply. So we're starting to come up into that now, and it's just a matter of whether or not we're going to be able to challenge that area and stay above that. So I'll keep our fingers crossed for those of you investing primarily in the Australian market. By comparison, if we go through and have a look at the S&P 1500, we've been in low risk for a couple of weeks now, and again we're challenging these all-time highs on the S&P 1500. So again, interestingly, that we're coming up to May, and we did run a macro session on Friday as to the theory behind sell in May and go away, and whether that's going to have potentially statistically any relevance as we approach May in the course of the next week or so. So if you haven't watched that, go and have a good look at that. All right, we might go through to the Australian pendings now. During the course of last week, we had this particular stock, GJT, which was a setup in terms of price action, etc., relative strength. But you'll see that in this last week, we're now in a short-term downtrend. So that means that by virtue of that, we've also formed a new medium-term peak, and that medium-term peak is lower than the previous medium-term peak, and that means that our price action model has been invalidated, if you like, and so that trade is going to come out of the watch list. So that was one cancellation. We do have two new setups this particular week. LEP is still in there. It hasn't triggered yet, so that's still on the pending, and BWP, the most recent setup on that, is still pending as well. Oh, sorry, actually no, BWP did trigger, and if we have a look there, the high there, 346. No, it hasn't triggered. Sorry, my fault there. We've got the on-stop order there at 347. So still having to wait for that particular one, but two new setups for the week in the Australian market, and the first one if Beyond Charts will allow me. There we go, is MVP, Medical Developments International. So as you can see down the bottom, really good relative strength for a long period of time. This has been in the watch list on one previous occasion, and the setup was basically through here once we broke through this last medium-term peak. And it wasn't that long after we got triggered, and then the stock fell away. It fell below its trailing 3 ATR. But interestingly, and again, I've mentioned this on a number of occasions, that this 63 period moving average, for those of you who want to remain perhaps a little bit less active, but still have a very discreet get out rule, which you must have if you're managing your own portfolio, that 63 period moving average has done very, very well again. And certainly if you were in that earlier on and you used that as your get out point, then you'd still be in that trade quite comfortably. In terms of the setup, we've just got to breach this last medium term peak, and to do that we have an on-stop order at $6.02 and a stop loss at $4.99. And we'll just zoom out quickly. We're at all-time highs, so obviously market really liking this stock. This stock. And again, you can see that right through the relative strength aspect as well. And the other one that came up this week was Steadfast Group. I'll just take off that ATR line there because that's a little bit confusing there. Certainly it doesn't have a long history, and you can tell that because our green line, which is our longer term moving average, has only just started to come into play. And if I zoom out 100%, you'll see that's pretty much its entire history. So a stock that has largely gone sideways for a fair amount of time has recently been finding some good strength, some good upward directional movement, and you can see that coming through in the relative strength aspect. And in terms of in this particular example, in terms of price action, last trough well above second from last medium term peak, and also now really starting to move beyond what was I guess a major point of supply way back in 2013. So Steadfast Group, just got to wait until we get past this last medium term peak. In actual fact, I think that last medium term peak there, the high there 186, that last candle there 187. So we're going 1.5%, sorry, not 1.5%, 0.5% above the high of that last candle. So we have an on-stop order there at $1.88 and a stop loss at $1.69.5. Right, in terms of management of the existing trades, we had a couple of trail stops. PLS David, Pilbara, one on the top there, and you can see this has moved very strongly over the course of the last few weeks, and I'll just zoom in there a little bit. The last candle in particular, nice bullish candle dragging up its trailing stop. So PLS had its stop trail. ARB, again, just ever so slightly, just trailing that protective stop up a little bit further. AOG, a nice candle last week, dragging its trailing stop up as well. And GMM. And again, this stock has really taken off since it was put into the watch list about a month ago. So what was around about a 10-cent risk, or around about, on the basis of the price at that time, around about a 30% protective stop, has moved from 30 odd cents now, closing up to towards 69 cents there. So it's basically gone up 200% since that particular time, and initially having around about a 30 odd percent in terms of price protective stop. So moving very, very strongly indeed. There were no stop outs in the Australian portfolio in the last week. All right, so we might now go over to the US market and go through some of the new setups for this particular week. So what I might do is bring over the pending watch list, and what I'll do is I'll start from the ones that were cancelled this last week. So NVR, there, we'll bring him up first. NVR. And you'll see that last week, putting in a a lower high and a lower low, so we are now in short-term downtrend, and because we are, we've also just produced a new medium-term peak. That medium-term peak is lower than the previous medium-term peak, which means we are now in medium-term downtrend, and we can't be long when we're in a medium-term downtrend. So from that point of view, that's coming out of the watch list. TSM, again, exactly the same, for exactly the same reason. We're now in medium-term downtrend, and that needs to come out of the watch list as well, the pending watch list. And ADBE, Adobe, also for exactly. Why have I got that in there as a cancelled order? That's a good question. I'm not exactly sure. Ignore that. That will still be in the pending watch list for the time being. Right, in terms of new setups, ACN is our first one. And there's quite a number of new setups this particular week, so just bear with me as we go through them. First of all-time highs. It's a good thing. All-time highs, the market's moving up towards all-time highs. Good relative strength. Price action, last trough, well clear of second from last medium-term peak. So that's ticking the boxes as well. Certainly a major point of supply through that level there where the protective stop is around about 108 as an example. So price action certainly being supported above that level, which again is a positive side for this setup. So ACN, all we have to do is wait for price to break through the last medium-term peak. So to do that, we have a non-stop order, $117.10, and a protective stop coming in at 108.49. That's ACN. Next one, AVY, Avery Dennison, and again, nice price action. You will notice that last candle, if we just zoom in a little bit, has already surpassed that the last medium-term peak. That's okay. All we want to do is we still want to wait until we get the benefit of follow-through price action. So we're going to set a non-stop order 0.5% above the high of that last candle. So that'll have a non-stop order there at $74.70. Our protective stop outside of 2 ATRs, it must be below the last medium-term trough as well. And that has our stop loss coming in at $69.09. If we just zoom out a little bit and just see where we are, really we're pretty much at all-time highs. The only time we've got higher than that was way back in 1998, and that's when the dinosaurs once ruled the earth in terms of history. So again, a stock that's performed very well of recent times. That's AVY. This is also a stock that has been in the watch list on previous occasions, and again you'll see that blue line, the 63, if you had used that to manage your trades, you would still be in it. We were stopped out on the basis of I think it was a close below. I think it may have been back here, close below our longer term mental blank there, David. Our trailing 3 ATR. I've got a bit of a cold at the moment. I've had it since last week, so perhaps that's my reason for my tardiness this morning. That's AVY. Next one, BIN. Excuse me. Progressive Waste Solutions. Isn't that funny? The stock code BIN. There we go. In terms of price action, last trough at or above second from last medium-term peak, and I'll just get rid of that ATR line there as well. So in terms of the price action, let's just zoom out a little bit and have a bit of a look at where we're up to as well. So you can see that for a long period of time, a fair bit of underperformance as this stock really just sort of went sideways or grinded higher progressively, very slowly over a period of time, and underperforming the strong US market. However, more recently, you'll note that the price action has been very, very strong. And as such, we're getting up to all-time highs. We've just got to break through that last medium-term peak. Price action, last trough, well above second from last medium-term peak. Good relative strength. On stop at 31.85, stop loss at 27.97. It's BIN. The next one, BMS, Bennis Company. Price action, last trough at or above, second from last medium term peak. Good relative strength. Let's just zoom out and see where we are. All-time highs, so again, all we need to do is wait for that order to be triggered. So on stop at 54.46, a stop loss at 49.98. That's Bennis Company. Next cab off the rank, BWXT. There it is there, BWX Technologies. In terms of price action, last trough just been formed. Where is that trough in relation to second from last medium term peak? Well clear, good relative strength. Let's just zoom out and see where we are. We're at all-time highs. Again, the market must really like this particular stock. And again, that's coming through by virtue of that continued relative strength comparison. Very important concept. All right, so our on-stop order, a breach above our last medium term peak. Again, remember 0.5% above that level. On stop at 34.78, a stop loss at 31.98. Next cab off the rank is CSH. CSH, Cash America International. So again, you can have a look at the price action there. Last trough, well clear of the second from last medium term peak. Again, in this example, you'll notice now that we've just gone into short-term uptrend, that last candle is higher than the medium-term peak, and that's okay, providing we can still place a sensible protective stop, and that we are also ticking the box in terms of price action and relative strength. So to take this particular trade, a non-stop order 0.5% above the high of that last candle high at 40.04, so 0.5% added to that, has a non-stop order at 40.24. Protective stop must be below that last medium-term trough and at least 2 ATRs away from our entry level, and that has a stop loss there coming in at $36. Just zoom out quickly to see where we are, and again, all-time highs, so certainly a very positive aspect for this particular stock. That's CSH. CVG, the next one, Convergys Corporation. Again, we'll just zoom in there a little bit so we can just see the price action and the numbers on the chart there. So again, we've now got a short-term uptrend developing. So as a result, we've now put in a medium-term trough. Certainly the last candle, not as bullish as we would like. However, it does meet all the criteria in terms of relative strength and also the price action filter as well. So just zoom out to see where we are. Effectively all-time highs. Again, we're at higher levels than we were way back in 2007, and anything way back in the 2000s is, again, when the dinosaurs ruled the markets, so to speak. So, again, on that basis, the only detracting thing from this stock is that last candle. It would have been nicer to see something a little bit stronger. The next one, FICO, Fair Isaac Corporation. Again, in terms of price action, there's the last trough, well clear of the second from last medium-term peak. Good relative strength, so it's been outperforming for a considerable period of time. Let's just see where we are historically. Again, all-time highs. It's amazing. A stock like this, you think how many all-time highs has it made over the course of the last few years? So anyone who ever suggests to you, don't buy a stock at all-time highs, tell them that you know better. And there's lots of evidence of stocks hitting all-time highs, continuing to create all-time highs as they just go higher and higher and higher. FICO on stop at 109.80. Protective stop coming in at 98.81. That's below that last medium-term trough and at least 2 ATRs away from the entry level. Next stock, GVA. Granite Constructions. Again, really nice price action. Not a bad candle from last week, all things considered. Where's that trough, that last medium-term trough, in comparison to the second from last medium-term peak. It's well above it. Price action now, points of demand now being created at or above old major points of supply, so a positive aspect to it in terms of price action. Where has it been? Well, again, we're getting up to potentially all-time highs. The only time we got up to those levels was 2008, sort of pre-GFC time, so I'm certainly discounting that. Again, that's a long, long time ago, even though some people still bear the scars, certainly, of that period in market history. On stop order in this case, 48.83, stop loss coming in at 43.32. That's GVA. HD, Home Depot. And I might just move our numbers out of the way there. And again, you can see very good relative strength for a considerable period of time, not without its periods of volatility. And if I just zoom in a little bit to go through and have a look at how this has performed over the longer term as well. Interesting, a stock that has been relatively strong for a long period of time, and you'll see that whilst our 3ATR model does a very good job of keeping us in the trade, it's certainly not without times where we've certainly got excessive volatility. Did price close below our 3ATR? No, it didn't during this big volatile week back in August, September time. It did close below it more recently back in February. Remember, January was a pretty terrible month on the markets, but still remained above that longer term 63 period moving average. So certainly, again, if you're a more passive type of investor with a plan, a trader, then certainly you can absolutely use that longer term moving average. On stop order. You'll notice here that a long-term peak through here, we've already had our first test of that particular level. So just zoom in a little bit. A couple of weeks ago, we tested that particular level. We've retraced. Price has passed that last medium-term peak. So on the basis of that, the price action is still ticking the boxes. Last trough at or above, second from last medium-term peak. We just want to enter this one 0.5% above the high of the last candle. The high there, 137, 0.5% above that level has us at 137.68. So we've got to get that follow through to be triggered in. Our stop loss coming in at 127.44. That's Home Depot. Getting there, folks. HSIC. The next one, Henry Schein. In terms of price action, last trough, well clear of second from last medium-term peak. Good relative strength. Let's just zoom out and see where we are. We're at all-time highs again. So a stock that's at all-time highs whilst the rest of the market is yet to make all-time highs means that this must have very good relative strength. And it has, as seen by the relative strength comparison at the base of the chart. Last trough, well clear of second from last medium-term peak. We just need to breach that last medium-term peak. So we have an on-stop order at 174.43, a stop loss at 161.89. That's HSIC. MKTX is the next one. This is one that's already in the portfolio. It's been in it for a period of time, and it's just presenting itself as another setup as well. In this particular example, we now have a confirmed short-term uptrend. Those of you who are perhaps wondering why this hasn't turned up before, we now have a short-term uptrend confirmed. So we have a series of higher highs and higher lows, producing a new medium-term trough. That trough is certainly at or above the second from last medium-term peak. So it ticks the price action filter. Good relative strength. We only now need to, in this particular example, pass the previous major point or most relative point of supply. So the high there and that last candle there, 129.57. The high on this one here, 129.83. So that's the most recent high. We need to certainly go above that level. 0.5% above there for our on-stop order. Means we have an on-stop order at 130.47 and a protective stop coming in at 116.58. That's MKTX. MSI. Motorola Solutions. We are now in short-term uptrend, albeit only just. Not a particularly decisive candle last week, but nevertheless, we do have now a newly created medium-term trough. That trough well clear of the second from last medium-term peak. Let's zoom out and see where we are. Again, there certainly have been higher periods in this stock's history, but they are way back pre-GFC time, so I'm going to be ignoring those for the relevance of this particular setup and just zooming in a little bit. All we need to do is breach that last medium-term peak, and as such, we just need to place an on-stop order at $77.21, protective stop at $70.86. That's at least 2 ATRs away from that entry, and it must also be a minimum of 0.5% below that last medium-term trough, and you'll see it's well clear of that particular level. That's MSI. Next one, NOC. Northrop Grumman is the name of the stock. Good relative strength historically for a long period of time now, continuing to move in an upwards direction. Might just zoom in a little bit closer so we can see the price action on this one. Last trough coming in at or above the second from last medium term peak, so ticking the price action criteria. All we need to do on this particular one is wait for a breach of the last medium term peak there, the high there at 203.88. Now that particular figure there, 203.88, 0.5% above that level is not 203.89. So let's get out the calculator, David. 203.88 multiplied by 1.005 equals 204.89. Now let's just check that last candle there, 204.89. I'll just minimize that. That last high there, 203.41. So we have to defer to the medium term peak. I'll just bring up that calculator again. So it's 204.89. Oh, I think I've just typed in the wrong number there. So that should be 204.89, not 207, David, 204.89. And let's make sure that we've got this one all right. The ATRs on that 13.24, take away 13.24, gives us 191.65. And again, interesting, isn't it? I've made a little blue there, 191, come on, be on charts, 191.65. So that's the new setup for that particular one. So I'll just reiterate that. It's not annoying when that happens. On stop order at 204.89, stop loss at 191.65. That's on NOC. Next one, PLCE, Children's Palace. Again, short-term uptrend, forming a new medium-term trough. That trough well clear of the second from last medium-term peak. Let's just zoom out and see where we've been historically. Again, all-time highs. So a stock at all-time highs whilst the market is yet to get to those particular levels means that we've got very good relative strength, and certainly since the beginning of the year this has really moved up very strongly indeed. We just need to wait for a break of this last medium-term peak. So that'll see an on-stop order there at 85.33. That's 0.5% above that high there at 84.91. Our stop loss needs to be at least 0.5% below that last medium-term trough there, and at least 2 ATRs away from that entry level. So our stop loss coming in at $75.02. That's Children's Palace. THO, the next one, Thor Industries. You'll note we do have a long-term peak over here, so major point of supply. Highest point between medium-term uptrend and medium-term downtrend is a long-term peak. Let's just zoom out and see where we are. So that long-term peak is the only thing that's been stopping this particular stock from going higher. So if we get to break above those levels, and really interesting that we've got a long-term peak here, we've got another long-term peak here as well. We're coming up for effectively another major test of this long-term peak. So it'd be interesting if we happen to break past that, whether this, what has been a very major point of supply, will turn into a point of demand and launch this upwards. So we'll have to wait and see. Last week's candle, obviously a little bit timid there. We zoom in, you'll notice a pin bar pointing in the wrong direction, but again, that's to be expected at these levels. And those pin bars, once price closes above those levels, price can certainly move quite quickly in that future direction. In terms of price action, last trough well clear of second from last medium term peak, and rising relative strength comparative over the last several months. Thor Industries on stop at 65.03, stop loss at 58.97. UNH, getting close, folks. UNH, United Health Group. Last week's candle putting us into a short-term uptrend, and you'll notice that candle has now breached the last medium-term peak. I'm happy with that. In terms of history, we're at all-time highs. Obviously, considering what this stock did last week with respect to the rest of the market, you'll see that last histogram bar on all three timeframes certainly increasing. So increasing relative strength as well. To take this trade, we just want to wait for price to exceed the high of that last candle. The high at 133.11, 0.5% above that, on stop at 135.78. Stop loss coming in at 124.35. Second last one, VSAT. And again, good price action. Last trough well clear of second from last medium term peak. Let's just zoom out and see where we are. Again, we're getting up to all-time high levels. Let's have a look at the most recent relevant period of history. And again, you'll see long-term peak, or at least if it's not a long-term peak, it's certainly a major point of supply. We don't actually have a medium-term uptrend on this side, but again, if we think about it, the highest point here, there, the high 74.78. If we go back to the high over here, 73.43. So this is an example of where this is technically a long-term peak, but this point here is higher than our long-term peak. So we're going to defer to this particular level, given it's the most relative, and use that as our major point of reference. We've already passed that particular level. We've come back, we've retraced, had a nice shallow retracement, good candle last week, good price action, has been going sideways for a long period of time, so potentially one of those breakout plays where the stock has really not been able to find any clear direction, but certainly if we break out of that particular level, then it's quite possible that we can get a nice move to the upwards side. We just need to wait for the break of the last medium-term peak. I'll just zoom in a little bit there and bring our price back. To do that, on stop at 76.96, stop loss at 68.97. And the last one, WBMD, WebMD Health Corporation. Again, good relative strength on this one. Has been going sideways for a bit of a period of time, and just draw that in just for reference sakes. Whereas stock has really sort of gone sideways, started to show a good bit of relative strength moving towards the upside, challenging the upside of this particular rectangle. Since then, moving upwards out of that sort of sideways zone, if you like, coming back, retesting, old point of supply, now acting as new point of demand, so that's a good sign for it. We just need to now wait and see whether we can breach that last medium-term peak. To do that, we have an on-stop order at $63.45. Stop loss coming in at 56.56, and that's outside of 2 ATRs and at least 0.5% below that last medium-term trough. That's WBMD. There were no trailed stops in the watch list last week. There was one stop out, HRL. And that's in the pendings list. That's why That's not coming up, David. HRL, Hormel Foods. So let's just go through and see why. So again, in this particular example, got off to a good start, has come back. We were able to take a little bit of risk off the table on this particular stock. It did close below its trailing 3 ATR as well. So those of you who choose to use a 63 period moving average, it's certainly a long way away. But if you're doing that with the initial setup, then you will certainly find that in this particular example, your position sizing might be a little bit different as well. In terms of trail stops, there were a number no trail stops, but there were 7 stocks, STOCKS, David, 7 stocks that did trigger. So we'll just go through and have a quick look at those before we wrap up. ASTE, that last candle there, just triggering its on-stop order, so that now goes into the watch list there. The high getting up to 48.24, a few cents above the on-stop order there at 48.21. CPRT, another one that triggered. Again, it would have been nicer to see perhaps a little bit stronger candle, but nevertheless triggered its order, and that goes into the open list as well. HON, Honeywell International. Again, similar sort of candle last week, a little bit indecisive, has triggered its on-stop order. That goes into the watch list. Accordingly, IEX Corporation, isn't it interesting that those stocks that have triggered last week showing perhaps a little bit of timidness, triggering in, forming a pin bar there. Again, need to wait and see what the future will bring for these stocks that have triggered their entry levels, and what the market does over the course of the next few weeks, given that we are coming into May. JBT triggering in, isn't it interesting? Last 2 setups there, triggering in on pin bars. So some early strength, and then obviously later in the week some supply coming in for those particular setups. UGI, let me have a look. Maybe I haven't added that to the previous list, so let's just go through, and that was in there last week. Yugi Corp. Here we go. So just bringing that one up. The high there, that last candle, 41.43, and again on stop at 41.36. So it did breach its on stop level, and therefore will go into the watch list accordingly. WSO, Watson Inc. Triggering in, and probably the best trigger of the set of those that triggered last week. So much more bullish candle than any of the previous ones, and certainly just at a quick glimpse, by and large, a lot more white candles than black ones in terms of pedigree of that particular setup. So there we have it, folks. A pretty long session today, incorporating both the Australian and the US markets. A number of new setups in the US. Only 3 cancellations from last week, and there were 7 that triggered. Well, thank you for being with me today. Hopefully you're all having a nice time at home over the weekend. Again, just giving thanks and remembering those that went and fought to keep this great country the place that it is. And I think it's important that we take a little bit of time out to reflect on those that have gone before us. Right, we'll catch up with you later on in the week for the Australian analysis session on Friday, and Monday's session for the US next week. Bye for now.